Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Alan Lewis. Thanks for being on the show, Alan.
Hey, my pleasure. Excited to be here. Thanks, Whitney.
You know, I'm honored to have you on the show. I know we've had some conversations, and I know you're a perfect guest, and just from your wide range and just very thorough experience in this industry. And so, but a little about Alan. He's the chief investment officer and co-founder of Diversifund, a financial tech startup dedicated to providing everyday Americans with the same investment opportunities as the wealthy. He's earned his law degree from Columbia and spent nearly a decade working as a corporate lawyer and investment banker on Wall Street. In 2014, he transitioned to real estate development, focusing on multifamily and master plan residential developments. In 2016, he co-founded Diversifund with his partner, Craig, say the last name, Alan.
Craig Cecilio.
Cecilio. Wanted to make sure I said that correctly. Craig Cecilio, to pursue his goal of democratizing wealth building through making alternative investments accessible to everyone. Alan has worked on transactions totaling an aggregate over $41 billion. Well, Alan, thank you again for your time. It's been a pleasure to get to know you a little bit. I'm looking forward to this interview. Tell the listeners a little more about who you are, and let's dive in.
Sure. Yeah. I mean, I'm a simple guy. I grew up in the Midwest in a suburb of Chicago and was the oldest of 6 kids. And, my mom was a stay-at-home mom, busy keeping us out of trouble for the most part. And my dad was an ice cream taste tester. He's worked for Dove Bar and Haagen-Dazs and Ben & Jerry's, a little bit of everything, which, is quite an interesting career. But what I realized when I went out to law school at Columbia out in New York was just this whole new world. I was, fellow students who were trust fund kids and who had parents who, had, wealth that I, couldn't even imagine. So it was a big eye opener to me, and to go from there to, having clients as a young attorney and investment banker who are private equity firms, making hundreds of millions of dollars, I just realized there was a whole different set of rules when it came to building wealth that, my family didn't know about. And so it was really my mission to go, okay, I have to figure out what these rules are, and then more importantly, start taking action to make changes in my life so that I could start participating, in those same wealth building paths. And commercial real estate, cash flowing real estate, is one of the obvious ones that a lot of us have gotten into, and it's been a great fit.
Nice. So, I pretty much didn't hear anything after your dad was a ice cream taste tester. No, I'm just kidding. That'd be an amazing job, wouldn't it?
Yeah.
So, and that's awesome. But you noticed these things, and then you determined how to take action to realize that for yourself as well. So that's incredible. But today in this business, like what is your, specific focus, and what are you doing in this business, like today, every day?
Yeah. So, at Diversifund, we started this company, and our big goal is just to create an online investment system so that people can come to the website. We have an SEC qualified REIT. It's structured as a REIT for tax purposes, and that fund invests in multifamily, cash flowing multifamily value add properties. So, and we have a very low minimum. It's just $500. So someone can start with $500 and all of a sudden be invested into a portfolio of cash flowing real estate. And so that's been a big part of our mission, is just to completely equalize access so that no one has an excuse anymore. Everyone can get started with real estate. On the other side, and this isn't on our website, but I work with some of our higher net worth investors who want to be part of a syndication directly into one asset. Instead of going through a fund structure, we have some investors who are writing bigger checks who say, look, I just want to invest in this 200 unit apartment deal in Dallas, or this 300 unit deal in Austin. We're doing a lot of deals in Texas right now because we like those markets. And so I'm working with those and having conversations, and even work with some of our family office partners and institutional partners that want to write, the whole check as a limited partner, and going through that process.
Nice. So, doing this business, I know you're having these calls with investors just all the time, and you are, I loved how you mentioned this before we started recording too. You're unpacking the complexity so they're comfortable writing checks. They're comfortable, with the knowledge, gaining this knowledge that you're able to give them about real estate and why it's important to own real estate, and helping them build that wealth that you were even talking about, in the beginning, that you learned as well. And so, I'd love to dive into that a little bit and how you unpack that complexity. And so, when the listeners or myself are talking to our investors, we can be at that same level you are and really understand how to speak to them in a way that they are comfortable writing the checks, they're comfortable with this investment, and that we're being as transparent as possible.
Yeah, and it really depends on the investor and where they're at. If you're working with a very new investor, you may have to start all the way at the top with just a story of cash flowing real estate. Here's why we like it. Here's why it's a low correlated asset and you don't have to deal with the stock market volatility. Here's some of the tax advantages with depreciation, covering your rental income coming out of the asset. And so you may have to start high level, but for someone who's now ready to get involved in commercial real estate, and they're looking at you as a sponsor, they're looking at you, at the particular deal, a particular market, then at that point, I really like to help them walk through, well, how do I look at the deal? How do we get comfortable with it? And really go through the story of how we found the deal, why we like it, what our concerns are. I think investors really want to see, okay, help me see the upside. That's the easy part. Now help me understand the risks and how we're going to mitigate them and deal with them. And I think having a balanced story really helps you to establish that credibility. So if I'm in a tertiary market and there may be, some risks, as far as occupancy rates go, I really want to get into the story of the comps. Here's a comp that's across the street and here's how it's performing. We went and visited it and here's what we saw. And here's where we think we can duplicate their success. And here's why we think we can match their rent per square foot. And really go through exactly how we think about our asset. And the other thing too, I found is a lot of your new investors have what I call analysis paralysis, right? They don't know what they don't know. And so if you have all this information, they just don't even know, well, is this enough? Should I be doing twice as much due diligence? And then there are 4 other questions, secret questions I should be asking. And so as I kind of walk them through, like, here's how I look at comps. Here's how I look at a pro forma. Let me help you understand why, we think you're looking at the IRR and the cash on cash yield while holding and the equity multiple are the 3 big economic drivers on return that we focus on. And then the other thing too is I think is a lot of investors don't want to admit what they don't know. No one likes saying, hey, can you explain that to me? I have no idea what you're talking about. And so I just always check in with them as we're having a conversation. Hey, as we're talking about this 18% IRR net to investors, I assume, you've heard that before, but happy to go through that. Would that be helpful if we kind of walk through that? And most people say, yeah, if you wouldn't mind going over that again and kind of walking me through the details, even if they're really familiar with it, it's still good to have a refresher and have that conversation.
Yeah, I think one of the first things you said there was so important too. You said, it depends on where the investor's at, right? Yes. And I think you have to be listening closely so you can understand, well, do they have some experience? Do they not? Where are they at? Like you mentioned. And so how to share this story. You don't want to insult them, but you do want to be as transparent and explain those details so they are comfortable, with investing in that deal. So what, as far as developing this story or listen, I want to back up though. How do you understand where that investor's at? What are some questions that you lead into when you're in that conversation so you can understand exactly where they're at?
Yeah, and that's exactly it. If you want to know where an investor's at, you just have to ask. And it's that simple. I know sometimes people are a little gun shy and feel like, okay, if I'm just having an initial conversation with this investor, it's probably too early to start asking, some personal questions about past investments. And I don't think that's the case. I've always found investors, at this point, they're talking to you about a particular deal. And I think they understand that it's, a very frank conversation about, what they're comfortable with and what they've done in the past. So I'll just ask, I'll say, hey, help me understand so that I can do a better job presenting this deal to you and focusing on things that are relevant to your questions. Help me understand, what you've done in the past. Have you invested in real estate before? Is it, have you done your own, vacation rentals, fix and flip on the residential side? Have you ever invested in an apartment building? Tell me about that deal. And then what will happen is they'll tell you their story. And if they've had a deal gone wrong, that's super helpful, because now that's a concern that you have to overcome. So if someone's invested and done fix and flip and had a terrible experience, I want to make sure I help understand why that went wrong and what the difference is here, so that they're not worried about, dealing with the same issues. And so it's really helpful to hear about their deals gone wrong, and then help them to see why this is a different scenario and how we've dealt with those risks, and don't expect to have the same issues.
That's awesome. Now, again, it's asking good questions and being a good listener.
Yeah.
Isn't it?
Yeah.
I mean,
People
you're
really are willing to share. I mean, and I'll even ask them, just to help me understand kind of where you're at in your investment profile. What's the typical size of check that you tend to write, for real estate deals, if they've invested in real estate deals before. And people will tell you, they're like, I'm a 50K, 50K, 100K, or, I start with 25K for a new sponsor. And that gives you a lot of information that's helpful for both sides.
Nice. No, so, in developing the story, I've heard numerous people talk about, you got to have the story, or a property has a specific story and you got to develop the story. When, what does that look like to you all, or when you're talking to an investor, or maybe even the story about, your all's company, or the story about the property? What are some things we should think about when developing our story or property specific story?
Yeah, I think the story, covers three main areas. They have to like you as a sponsor, so you got to tell your story as a sponsor. Why you're doing this. What you've done in the past. What your internal team looks like. And then you go to the asset itself, the story behind the asset, and then the market it's in. The story behind the market and why you like it and why you think it's a good place to be investing money, both short term and long term, depending on the hold period. So I think in each of those, the sponsor story, you really start telling the same story every time. And so you want to make sure you're trying to keep that story a little fresh. But with the asset story, I think it's starting with, hey, here's how we found the deal. It's an off-market deal, or we were bidding against others. And, we underwrote to this price, and we weren't the highest price, but they had confidence in us that we could close. And so that's why we got the deal, and we're still happy with the price we got. And then the market, I think this is a really challenging one for people who are outside the state. So for example, we're doing a lot of deals in Texas. And so if I'm talking to an investor in Texas about a Dallas property, I don't have to really talk about the market. They're like, I'm living in Texas. I see the headlines. I know it's a great place to be. I may have to spend a little time in that particular city. If it's a tertiary market, if here's the occupancy rate, we went toward the comps, like for example, just on an investor, we toured the comps, and the comps all three comps had 100% occupancy, and with a 2-month waiting list, per the property manager. And just telling them that, hey, we picked up the phone, we walked in the door. They like to hear that. And so you can kind of take them along with you on your due diligence journey and really help them to see, what you've seen, the lens you have on the deal. And then at that point, with the market, and the deal, it's helping them understand the opportunity. So for example, if I'm showing people pictures of a Class C plus building, a lot of investors don't see opportunity. They see a beat up, old building that needs a lot of help. And we help them to see, okay, now, here's a picture of what we are expecting to do on the renovation side. And we'll be able to take it from a $500 rent a month to, say a $600 rent a month based on the comp across the street that just did a renovation, a couple of years ago. And I know I can match those rents, if not beat them. And so now you're helping them see opportunity, in the ugliness of an asset, in the neglect of an asset, in the fact that it's been mismanaged by a team, that it's not leased up as well as it could be, that there's a loss to lease factor, in the current rents, even before you renovate, and really helping to see each of those opportunities through the story you tell.
Incredible. So the story is so important, and I appreciate you've elaborated so well on all those points, and even seeing how they see it. Like you said, they don't know how to see the value at first, do they? They don't understand. They don't, like you said, they see this beat up building and they're probably going to run from it. They don't see the value there or the opportunity. And so, are there any other ways that you are educating investors, maybe outside of that first call? Now we've told our story. We've told them about the property, the team, the market, and what are ways that you're educating them? Even after that first phone call.
Yeah, I mean, we've made a big investment into social media content and just content on the website. So we're doing, whether it's blog posts, or we'll record videos where we just kind of do a real estate 101, where today let's talk about for 5 minutes, what's a cap rate? How do we use a cap rate? How do we understand a cap rate? And these are terms that a lot of investors have heard, time and time again, and they kind of know what it means, but not really. And so if you can be successful at taking a complex term and repackaging it in terms that are accessible and understandable to an everyday investor who's not a professional real estate investor, that helps you really earn some credibility with them, because now you are positioning yourself as an expert who not only understands the stuff, but can make it accessible to the investors so they can overcome some of those fears of what they don't know.
Nice. Yes. So content, you're all creating more content, you're putting this stuff out so people are becoming more educated. And then anyways, like even, to the people who are already on your list, you're connecting through all these people through social media, any ways that you're reaching out to educate them to a higher level, I guess, so they understand, or maybe they're more prepared when you do send out that offering or then another fund or, anything like that.
Yeah, I mean, it's really just the content and the emails. We at Diversity Fund, we're actually pretty sophisticated. When someone signs up for our site, we're able to do a pretty good job of predicting, their demographic based on their location. Kind of, are they close to retirement? Are they, 30 and single in San Francisco downtown? And can tailor some of our content that we send to them through the automation process. And that's been really helpful, so that we're really trying to understand the different personas of investors that we're dealing with and tailoring our content to them through data applications. And that's something that I think all of us will have to get better at over time, is to almost create, at some point you're going to create individualized content for people. And that's, a few years out. But I think, I think when people feel like, okay, this is addressing the concerns, the needs, the desires, the goals I have as an investor, without even, and you're doing it without even knowing, without the voicing those things. And so it really is helpful.
Since you are, you all have started this fund, Diverse Fund, and, I'd love for you to talk about that a little bit, and maybe even some pros and cons to why someone would invest in a fund like that as opposed to, with a specific operator.
Yeah, so the fund, we're the specific operator in the fund. So all the deals in the fund, we're the sponsor. We're sourcing the deal, we're underwriting it, we're putting in our own capital. But the advantage to a fund is that if someone has $1,000 to invest, and they can put it all into one deal and then have what we call deal concentration risk. If that one deal doesn't perform, that $1,000 is at risk. Or that $1,000, if it goes into a fund structure, is now spread across 5, 7, 10 deals. And so if you have one deal that underperforms, you have 7 other deals that, if they perform as expected, make sure that there's not a loss. And so that's, especially for newer investors, I think that's a great place to start, is with a fund structure. So you have immediate diversification across multiple cash flowing assets, rather than just starting with one asset at a time.
So, when in your, syndication journey or real estate career, were you ready to start a fund, as opposed to maybe deal specific, funds or syndications? When was it like, okay, this is time for us to have our own fund where we can just fund numerous deals out of one fund?
Yeah, it's always a balancing act, right? I mean, if you're raising dollars on a per deal basis, then every time you have a new deal, it's a new scramble, right? You got to start having the conversations again, put the pitch deck again. If you're able to get to the point where you can create a fund that attracts investors because your track record is sufficient at that point to do that, now you're bringing in dollars and not having to, go, do a roadshow or go have, 20 conversations every time you have a new deal. You really have this passive capital on the sidelines ready to be deployed, which is a great thing as a sponsor. So you can focus more of your time on the deals, on the asset management, and really getting your investors a return.
Mm. So any cons to, having a fund? Well, some things, if I'm, in the syndication business and we've done some deals, but now we're thinking, okay, Alan, this sounds pretty good. Maybe we should start our own fund. What are some things I should remember or be thinking of?
Well, so then the question is, well, who are your investors at the fund level? So a lot of your typical funds are, you're trying to court, bigger high net worth investors and ultimately make the leap to institutional investors. who are writing bigger checks, but the amount of due diligence and the amount of reporting can be overwhelming for some newer sponsors who are new to the fund business. And I think that's a big reason for that a lot of people just shy away from that world. For us at Diversity Fund, our fund investors are all individuals, so we really don't deal with. We have a couple of institutional investors in the fund, but for the most part, it's individuals. And so, we're publicly reporting with the SEC. We do an annual audit, which creates more work, some more expense, but we get the advantage of kind of best of both worlds, right? We're not a publicly traded REIT on the stock exchange. We don't have to deal with any of that stock market volatility, and are able to get higher returns that way to our investors. But then they also have the advantage of seeing us as a publicly reporting REIT. So it's really this balancing act of understanding there are a lot of extra reporting requirements that come with starting a fund, but there are some advantages too. And you got to look at, hey, are we ready to make this transition?
Nice. And so, Alan, in your career in the syndication business, what's been the hardest part for you?
I think problem solving is always the hardest part. With any real estate deal, they rarely go according to plan. There's always something that surprises you. And I think for a lot of us in the business, that's part of the attraction, is that where a lot of folks would throw up their hands, it's an opportunity to say, hey, there's not an option. We're going to get this done. We're going to figure out a way to get it done. Whether it's creative financing, if you're a little bit short on the equity raise, and you got a week to go to closing, or you got the asset, you now own it, and you're knee deep in your renovations, and all of a sudden you're tearing up a wall, and there's a water issue that you didn't discover in due diligence, and so now you have to move things around the budget and figure out how to do that with the best return to the investors. There's always problems to solve, and that's one of the challenges, but it's also something that I think a lot of us actually really like.
Yes, it sets us apart, doesn't it? If you're the problem solver, then you're going to make it. So what about a way that you all have recently improved your business that we could all apply to ours?
We've and I think we'll always be focusing on this. We have a big team. We have, a big marketing team for our online efforts with our SEC qualified REIT, on the website. And then we have, a real estate team of 5 of us. And so we're always trying to be more disciplined about our systems, about, creating processes. What's the process of when we have a deal under contract, the process of, creating the pitch deck, who's in charge of that? How many days do they have to get it done? Who's going to give the pro forma numbers, and just having this process and system down so that, for example, if I have a guy and he's moving on to a different job, then with the new hire, they just, sit down, they have their process manual, and they know, okay, this is exactly what I have to do. And that's how you create a scalable system. So we're always trying to do a better job at defining roles, defining expectations, putting the process, pen to paper, and really writing that out. It takes extra time and effort, but ultimately it makes your life a lot easier and frees up your time as the owner.
Is there any kind of system or software that you all use to track those things to keep that improving?
We use Salesforce to, as a CRM, which, is an expensive commitment, but, very powerful in terms of what it can do. You would use different softwares for our content delivery, social media on the marketing side. Making those investments in software systems is always, gives you a little heartburn, like when you're looking at, writing those checks. But I think what happens is when your company's there, you kind of know it, it's just like, okay, it's time to, bump up our CRM and make this investment. And, it usually always pays off.
So what would be your best advice for caring for investors?
I think it's really helpful to create realistic expectations going in, which means you have to be conservative on your pro forma so that you're confident you can meet or beat your numbers. And I like to show investors, here's how we are conservative. Here's the post renovation comps, on rents. And, we have a range of $1.05 a square foot to $1.50 a square foot. And I'm showing them how I'm using, $1 less than the low end of the range in our pro forma. Here's our exit cap rate at 7 or 7.5, and stuff is trading, at 6 or less. So we're 100 basis points higher on exit cap rate, and helping them see, how the assumptions are conservative, so the expectations are realistic. And that way, you're not coming in below pro forma, where, I mean, we've all seen this happen, right? You promise an 18% IRR and you deliver a 16%, which is a great return. Someone's saying, hey, you guys messed up. What's going on? So I just learned that lesson long ago. Come in on conservative on the returns, and everyone will be very happy when you make those numbers work.
Great advice. And if you had to pick one thing that's contributed to your success, Alan, what would that be?
I think it's just tackling the hardest thing. I mean, that's I had a phone call, this morning where, we would probably have to ask for an extension with the seller. We just need another week to get the financing in place. And there's an example of, that's not a call anyone likes to make. I think a lot of people, start thinking of, well, what's the worst case scenario, and start thinking doom and gloom, like, oh, the seller could say, we're not going to give you the extension and take your deposit. And I just find you just get on the phone, you have the conversation, you tackle the hardest thing in your day first and foremost, release that fear and just take it head on. And then you realize everything's solvable in life. There's always an answer. It may not always be the best result that you like, but there's always a solution. There's always a path forward, and you just got to tackle it head on.
Love that. Love that answer. Tackling the hardest thing head on. And so, Alan, how do you like to give back? My family, we go to church, and there's a lot of volunteer experiences there. And that's great for my kids, just to see that, there's a lot of folks who have their own personal struggles. I think, helping them see that there's opportunities to serve and give back with time or otherwise is something that needs to be part of everyone's life. Just so you kind of, get over yourself and forget about your own problems. And so, we try to be very active in service projects and things like that, and, and give that way. Nice. So I appreciate you sharing that. And Alan, you've been a fantastic guest. I appreciate your time. And it's such an important part of the business, right? Educating investors and painting the story that, is very transparent, tells them what they need to know. And even if they don't know what they need to know, and getting those things across. I appreciate you elaborating on that and telling us pros and cons of managing a business like yours. And but tell the listeners how they can get in touch with you and learn more about you.
Sure. They can always reach me at our website, diversifund.com. I'm at Alan, ALAN, at diversifund, DIVERSYFUND.com.
Thank you for listening to the Real Estate Syndication Show, brought to you by Life Bridge Capital. Life Bridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. Life Bridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.